Banking Regulation and Business Laws BRBL. Regulation of a banking business. See, who basically regulate the banking business? The answer is very simple, the Reserve Bank of India, right? So see some basic introduction about the regulation of a banking business. The Banking Regulation Act 1949 regulates the activity of a banking companies by empowering the Reserve Bank of India to issue the direction for the loans, advances and acceptance of the deposit. It imposes some restrictions on loans to the director of the banking company. It also provides transfer of profit to the reserve fund and maintain the cash reserve and the liquid asset. So we will learn about the provision of this act. So basically very simple thing, that who basically regulate the banking business? Obviously RBI is regulating the banking business in India. And what the authority gives RBI? So simply we are having the Banking Regulation Act. That act enable RBI to monitor, supervise and regulate the banking business in India, right? So what are different type of regulation? Simply the way of statutory directions, right? The way of statutory direction and non-statutory direction, for example say the circulars. So RBI having some restrictions on the bank cannot give some loan to the director, right? There should be the CRR, SLR that should be maintained. So these are all guidelines. These are RBI is imposing on the banks by the way of a Banking Regulation Act. So simply one important point you should note that the Banking Regulation Act enacted as a Banking Companies Act 1949. Then it was changed to the Banking Regulation Act with effect from 1st March 1966. Okay, so very simple. It is just for your information that it was in the beginning Banking Regulation Act was simply the Banking Companies Act 1949. Then it has been changed to the Banking Regulation Act with effect from 1st March 1966. Okay, now see how RBI issue the direction and advice. Simply here we will learn more about the directions and the advices that RBI can provide to the bank. So how RBI and what direction RBI provide to the banks, right? So in simple way, what are the nature of directions? Simply RBI issue the statutory directions that are binding on the bank under section 21 and 25, right? So what do you mean by the statutory direction? Simply see the anything. What is the meaning by the statutory? Statutory means what? It is by law. It is by law or by act. That means or by the way of constitution, right? So simply the thing which are having some legal background, which is having some legal background, is called as the statutory, right? So anything, see RBI is giving some direction as per some, for example section 21 RBI is giving some direction. So this is section 21 of a Banking Regulation Act. So this act is RBI following. That act is empowering RBI to issue that direction. That's why this direction will be the statutory direction, right? So simply the direction which RBI issue using some act, some law, these are the statutory direction, right? And as per section 21 to 35 of the Banking Regulation Act, RBI can do so. So RBI also issue some circulars containing instruction to the bank. These are binding on the bank even if they do not refer to any statutory provision. Statutory provision means it is provision by law, by act. However, non-statutory circular of RBI cannot affect the legal right, right? Means what? Simply whether it is statutory or non-statutory, it does not have any effect on the legal right. RBI direction are addressed to the bank and not to its customer, right? So whatever RBI is giving the direction, these are always to the banks and not to the customers. It is very, very important that they can ask you whether the following is true or false. So RBI issue direction, RBI directions are addressed to the banks, not to its customer. It is true or false. So it is a true statement. You have to remember that RBI never give any direction directly to the customer. They have to follow, or they have to give only to the banks and not to directly customer. Okay, because RBI is not regulating the customer. RBI is regulating to the banks. Okay. Now power of RBI to issue the statutory direction to the banks. What are the Banking Regulation Act provisions? Okay, so this is important. Okay, so we will see some section. So section 21 of the BR Act, according to that section, RBI can give direction to the bank for regulating the loans and advances, right? As per section 35A of the Banking Regulation Act, RBI has a general power to issue the direction to the bank in public interest. Generally it is on the loan or the deposit, right? So very simple. 21 is all about the loans and advance, instruction or regulation of the loans and advance. 35A is about the power regarding that RBI is having, that RBI can issue the direction to the bank in public interest. These are only related to the loans and advance deposits. 35AA is all about that the central government can authorize RBI to issue direction to the bank to initiate the insolvency. So see, this is very much powerful tool that central government is having, right? Using that 35AA, central government will ask RBI that RBI should ask bank to initiate the insolvency if any bank is not performing well. 35AB is all about that RBI can issue the direction to the bank on stressed asset, right? So 35AA is for the initiation of the insolvency, that government can issue the direction to RBI, then RBI will follow it to the RBI send it to the bank. 35AB is all about the stressed asset. RBI can issue direction on the stressed asset. And 35AA and 35AB, these are inserted as per the Act in 2017. 35(6) Section 36 of the Banking Regulation Act can, according to that, the RBI can caution, advise or even prohibit the bank from undertaking certain transaction or certain business, right? So RBI can say you cannot do the dealing in, for example, say the trading activity. So such a direction RBI can issue, right? So RBI can send advice, RBI can send the caution, or RBI can even prohibit the bank undertaking certain transactions, certain businesses, right? This is all about from the Section 36 from the Banking Regulation Act. The direction or the master circular issued by the RBI, these are statutory direction to the bank. So obviously statutory means these are as per the law, as per the legal provision, as per the act enacted. Supreme Court held that the direction issued by the RBI are applicable only to the banks and not to the publics. That's why I have already told you in the beginning itself that RBI issued direction to the bank and not to the public and not to the directly customer. Okay. Now see, acceptance of the deposit. See, it is very much basic that we have already learned that there are basically some types of deposit, right? So what are that? Basically saving account, current account and term deposit. So see in detail here. See, acceptance of the deposit. So we will learn about the type of deposit that can be accepted by the bank and about the regulation which are related to the acceptance of the deposit and unclaimed deposit. So it is important for exam point of view, unclaimed deposit, right? So first we will see what are the type of deposit. Simply, bank can have the time deposit and the demand deposit. See, name itself is indicating what is the time deposit. Simply it is like a fixed or a recurring deposit. It is repayable after agreed period. For example, if you do the FD for 3 years, so when you will get the maturity amount after 3 years, right? That is what it is, repayable agreed period, after the agreed period. And the demand deposit is very simple, like a current account balance or the saving account balance, right? When it is payable on demand, whenever you want, you can go to the bank, you can withdraw the money. These are what? These are the demand deposits. So very simple. Time deposit after some time, demand deposit on time, on demand, right? So very simple. Time deposit refer to the fixed deposit or term deposit. After some term you will get after maturity, and time deposit simply the balance in current and saving account. Now the depositor and the bank agree on the period of deposit and the rate of interest subject to RBI direction, right? So obviously depositor will sign the deposit form, which then obviously the bank and depositor, they will be agreed that for example after 12 months you will get 7% rate of interest, like that. Okay, so basically it is agreed thing, the thing which we are taking signature on the form, say FD or saving account, current account. That means the both the bank and the customer is agreed about the rate of interest, time, etc. Now see, important, how RBI can issue the direction. So simply Section 35A empowers RBI to issue the direction on the acceptance of the deposit to the banks, on acceptance of the deposit. Section 35A. And we all are aware that there is no any interest you are getting on the current account, and for a fixed deposit minimum tenure is 7 days and maximum is 10 years. What is the period for the FD? For period of FD is ranging from minimum 7 days to 10 days. Okay. Now RBI again stipulates the following: what? That minimum and a maximum period for which the deposit can be accepted. This is given by RBI. So this is what the RBI given direction. You should accept the deposit for minimum 7 days, maximum 10 days. RBI can also say that what procedure should be followed for premature withdrawal of the deposit. For example, if you want to break the FD, what should be the penalty, what should be changes in the rate of interest in such cases. So reduction of rate of interest on the premature withdrawal, that also RBI can guide. RBI can also guide about the payment of interest when you renew the deposit. Okay, so these direction RBI can issue. Apart from that, currently RBI issue the direction on NRE deposit and the senior citizen account. So for senior citizen, RBI is directing you 0.5% extra. So these type of direction RBI is now continuing. But whereas if we see about the other domestic deposit, for example, say the RBI is now deregulated the interest on the other deposit. For example, interest rate for other type of deposit they are determined by the bank at their own level, right? For example, what should be the we give a rate of interest on the saving bank account, right? So what should we give the rate of interest for 6 month for fixed deposit, right? So these deposit and the saving bank balance deposit interest rate that are decided by bank that are at their own level, whereas only for the NRE deposit and the for senior citizen account RBI issues the direction. All rest all are deregulated by RBI. Okay, because why? Because MCLR is the concept, and that whole banking, the rate of interest of the bank itself decided based on the MCLR, right? So what is the cost that bank is going to borrow? That is what the matter. Now see some of the other directions under section 35A which are including. See, Reserve Bank can give the integrated ombudsman scheme. So the direction given by RBI with regard to the ombudsman scheme, these are under section 35A. RBI can give direction for the priority sector lending, and RBI can give direction banks to desist from the sanction which are generally the loan against the fixed deposit of other banks. So obviously if you have the receipt of SBI, you have FD in SBI, you cannot give the loan against that FDI receipt in the say Bank of Baroda, right? This is not possible. Why? Because how can you mark the lien? System is different, right? So very simple to avoid the fraud. RBI said that if you are having FD with the bank same, you have to apply for the loan, that loan against the FD. Okay. Now section 35AA and section 35AB, these are what? These are for mainly Reserve Bank has power to issue the direction to the bank regarding to resolve the stressed asset. So we have already discussed, right, about section AA and AB. Section 35B is all about the prior approval that are required for appointment of or reappointment or even termination of the higher authority like chairman, MD, ED bank or the director of the bank. Okay, section 35B. So these are different sections under which RBI give direction to the bank regarding the provision. Okay, so 35AA and 35AB both are important, where bank is talking about the, we are mainly RBI talking about the stressed asset, right? 35B is all about the higher authority like MD, CEO, ED, director, termination, appointment or the reappointment. Now section 26 is very much important for exam point of view. It is all about talking the unclaimed deposits. So what do you mean by unclaimed deposit? That we will see here. See, action as per section 26 of the Banking Regulation Act, bank must file the return every year on the unclaimed deposit. So bank has to file return that what is the condition of today as on about the unclaimed deposit. The return must be filed within 30 days at the end of each calendar year. But when the calendar year ends, obviously in December, right? So so before 30 of Jan every year we have to file that report with RBI. That is what return every year on unclaimed deposit. So this is important, that should be filed within 30 days end of the each calendar year. Now it should cover all the deposit not operated for 10 years, right? You should cover all the deposits which are not operated for 10 years. That means if you have some balance in your account, you are not operating for 10 years. That means you are not doing any transaction. There may be the bank induced transaction which will not will be counted. If there are no customer induced transaction for 10 years, right, then it will be counted into the unclaimed deposit. So in case of fixed deposit, When will be the maturity period start? When we will count that 10 years period? After the maturity, right? So for a 10-year period begin from the date of expiry of the period of the deposit. So for example, your FD is expired or the matured on say January 2024, right? So on next day we can start counting 10 years period, okay? Not from where that FD has been open, right? So obviously after maturity or after expiry you have to count 10 year in case of the fixed deposit, okay? So what is the key point? As per section 26, you have to follow the unclaimed deposit rule of the RBI, guideline of the RBI. What is the guideline? Within 30 days at the end of calendar year you have to submit the return every year, that is on the based on the unclaimed deposits. Now see, section 26A further states that about the DEEF account. What is the DEEF? DEEF stands for Depositor Education Awareness Fund. Depositor Education Awareness Fund. Important. Full form is also important, right? And section is also most important. 26A, right? 26 about the unclaimed deposit. 26A about the DEEF. So DEEF stands for Depositors Education Awareness Fund. Bank has to remit the fund to the fund of unclaimed deposit. So what is unclaimed deposit? Which is not operated for 10 years to the RBI within 3 months from the expiry of a 10 years period. So what do you mean by it? Simply in your account there is 10 years, for 10 years you are not doing any operation. So once that 10 year completed from last date of operation, then within next 3 months you have to deposit, or the bank has to deposit that money to the RBI. So simply the unclaimed deposit will go to the RBI after the period of 10 months and 10 years and 3 months from the date of last entry, okay? So simply 3 months, within 3 months that has to be submitted to the RBI. Whatever the fund you are having in the unclaimed deposit, the bank has to send it to the RBI. That should be within 3 months from the expiry of 10 years period, okay? So RBI uses the fund for depositors education and awareness. And what do you mean by simply? See, everywhere you are seeing the advertisement. There is RBI कहता है do not share OTP, RBI कहता है secure banking, RBI कहता है do the UPI. That means what? Basically RBI कहता है means what? Basically these from where they are getting money for doing such advertisement. So they are getting money from the unclaimed deposits which banks are sending to the RBI, okay? If a depositor or the nominee of a legal year claims the amount, the refund remitted from the account should be returned along with the interest, right? So once you even send your money to the RBI, still if anybody comes as a nominee or the legal year and he claims that I want money which you have sent to the RBI from the unclaimed deposit, in such cases you have to claim for the DEEF revival, and then you will get the that money in the bank and you have to give it to the legal heir or the nominee, and along with the interest you have to provide. So what is the rate of interest? So up to 30 June 2018 it is 4%, 3.5% for period 1/7/18 to 10/5/2021, and 3% for the 11/5/2021 onwards, okay? So this is just for your further information, but whatever you should remember that you have to give it along with interest, okay? And nowadays it is 3% for the period beyond 11/5/2021, okay? So this is all about the unclaimed deposits DEEF. Now let's talk about the nomination facility. See, in case of a nomination facility, see, when you are filling the form in the bank, right, you might have observed like that when you write something, when you basically fill the saving account fund nomination, right, that time you have observed, right, there is a written section 45ZA. There is one smartly written, you can check it when you are tomorrow going bank and we are finding the saving account or current account. There is something regarding the nomination, and there they have mentioned section 45ZA, okay? You can check it. So basically what I have to say, nomination is the facility where we are daily exercising, right? So as per section 45ZA, the sole and the joint depositor of the banking company, including even the cooperative bank, can nominate the one person as a nominee in the prescribed manner, okay? So basically, see, in saving account when we fill the form, there is section 45ZA is written, nomination as per section 45ZA, right? and according to that we can have the one person as a nominee in the saving account. It may be on the for the sole proprietorship account also. The nominee receive all the deposit in the event of death of the depositor, enjoys all the right of depositor in case of depositor's death, right? This is what the basic thing which we are very much aware. Now rule 2 of the banking companies, all about the nomination rule 1985, include the procedure and the form for nomination for the commercial bank deposits. For the cooperative bank, nomination rule 1985 also prescribe the provision for the cooperative bank. So what are that form? That also we will see in detail. Okay. Now see some sections about the nomination. See section here. See section 45 ZA at ZA to ZF. These are all about the nomination, right? Apart from that, you can say section 45 ZA and ZB about the deposit accounts. Then section 45 ZC to ZD is about the safe custody nomination. Then ZE to ZF, section 45 ZE to F is all about the safe depositors. Apart from that, the 45 section ZB to D and F, this is all about the protection to the bankers. Okay, so in that detail we will see here. See first section we will see in detail. Okay, so nominee should be the individual only. So bank provide the nomination facility to the customer with a bank deposit and the safety lockers. The nominee can be the individual only. So obviously nominee will be the individual. You cannot nominate the non-individual, right? Nominee should be the living person. Section 45 ZA is all about the nomination on the deposit. So you can observe this on the saving account or the current account form, right? So on nomination on deposit is as per the section 45 ZA of the Banking Regulation Act. These are mainly to the individual or the sole proprietorship firms. Minor can be the nominee provided that, but the another person should be appointed to receive the amount on behalf of the minor if the minor has not attained the majority when the amount is payable on the death of the account holder. This may happen that minor nominee is a minor, right? If you take the nomination of minor, there must be one provision. You have to give one additional one person's name, right? So that that person will get the money on behalf of minor if there is death of the account holder, right? So this is the provision. So minor can be the nominee. Yes, minor can be the nominee. Bank is discharged from the liability on payment to the nominee. This is the protection to the banker as per section 45 ZB. 45 ZB about the Banking Regulation Act 1949. Okay. So from here we get the protection according to the section 45. According to section 45 ZB, D and F we are getting the protection, right? So B is for the deposit, section ZD and F all about the other nomination. Say nomination to the safety locker and the locker deposits. Okay, so see simply 45 ZB gives protection to the bankers regarding the discharging duty about the payment to the nominee with regard to the deposit accounts. Nominee is only the trustee. Nominee is only the trustee of the account holder to receive the money from the bank, right? But nominee did not be the legal heir of the account holder. Nomination claim payment shall not affect the claim of the legal heir of the account holder against the nominee. Means what? Simply, see, nominee cannot say that I am the nominee, give me the money. Nominee cannot claim, but unless there is a death of the account holder. Once there is a death of account holder, then only nominee can ask money. Otherwise, nominee cannot ask money, right? So, who will get first money? Suppose there is joint holder, right? A and B are the joint holder, and C is the nominee. C is the nominee. On event of a death of A, B will have the first right because he is the joint holder. If both dies, then only the nominee will come into picture. In such a way, simply I can say that nominee is only trustee unless until there is a death of the account holder. Okay, so and once you do the payment to the nominee, how you are protected? Section 45 ZB gives you the protection to the banker. That is what you are protected as per section 45 ZB regarding payment to the nominee. Now safe custody. So what is safe custody basically? See, section 45 ZC is all about the nomination for article which are kept in the safe custody. So safe custody is basically the type of bailment where what we do, so available only in the individual account and not in the joint account. So see, it is bailment, it is where you are keeping something, right? So how it works basically, so bank will get discharged if the article is returned to the nominee. So what is the procedure? See, safe custody lockers means what? What is safe custody? See, if you are having something, you will go to the bank, you put your thing with the bank, right? And you will get some receipt from the bank, right? So that's why that is simply procedure. Once you surrender the receipt, you will get your ornaments back or the things back. So this is what the safe custody. You are using the bank's custody for some short period of time, right? Till the receipt you are holding. So these are only applicable for the individual account and not to the joint account, because who will bring the receipt, right? Who can handle the receipt? That's why it is only applicable to the individual account. Section 45ZD again give the protection to the banker. A bank will get the valid discharge if the article is returned to the nominee, right? So obviously section 45ZD is simply for the protection to the bankers after discharging the duty of a safe custody. Okay, so simply 45ZD gives protection to the bankers against the safe custody, against the safe custody duties. Now safe custody, safe deposit locker. Now see, this is simply the locker. Safe deposit locker means locker, right? So that everyone is having in the branches. Now section 45ZE is all about the nomination for the article which are kept in the safe deposit locker. So in case of safe deposit locker, bank will be the lessor and the customer will be the lessee, because bank is giving their locker to the customer. So bank will be the lessor, customer is receiving, so customer will be the lessee, right? So this is also available for individual also and even in a joint mode of operation also. In case of a jointly operated locker account, there can be more than one nominee, right? So there can be more than one nominee provided account is operated in a joint mode. Section 45ZF again gives protection to the banker, right? So bank will get valid discharge on handling over the content in the locker to the nominee, right? So if there is case of nomination, bank is handing over the ornaments from the locker to the nominee, and bank will get protection under section 45ZF, right? So I have already told you, I will repeat the sections, right? See about the protection. See for section 45ZB is about the protection against the nomination in deposit account. Section 45ZD is give protection for the safe custody, and ZF gives protection to the banker against the lockers. Okay, so these are the section, very simple. 45Z is very much common. B for the deposit, bank deposit, D for the safe custody, and F for the lockers. Very easy to remember, right? So this is all about the protection to the bankers. Rest section you can also easily remember, right? C is for the C for custody, 45ZC, and E for lockers, ZE. Okay, in that way you can easily remember. Rest are same. Okay, now further, nomination can be cancelled or altered any number of times by the account holder. It is a choice of the account holder, whereas the only last nomination will be valid. Okay, now let's talk about the forms. I have already told you there are some forms, right? So you can check out when you tomorrow visit the bank. There is nomination page on the saving account form. So there is a written form DA1 and section is also written, right? So you can just observe, you will feel that yes, there is mention, it is as per the rule, right? So for deposit account we are having form DA1. This is for the nomination purpose. If you have to cancel the nomination, you have to fill the from the customer, you have to get the DA2 form, and DA3 is for changes in the nomination, right? So you can check out, these forms are also available in your bank. DA1 is for doing the nomination, DA2 for cancellation of the nomination, DA3 for change in the nomination. For safe custody also we are having form SC1 again for nomination, SC2 for cancellation, SC3 for the changes. Again in the same way we are having for the lockers also. From form SL1 is for new locker nomination, SL2 is for cancellation of the nomination in the locker, and SL3 for changes in the nomination in the locker. Whereas if the account operated in the joint mode, then we have to use form SL1A and SL2A and SL3A. So simply 1A will added. This is simply for the if it is operating in joint mode. Okay, So these are the form which you can easily remember. Okay, now see, very easy na, right? 1 2 3, new, cancel or alter, like that, very easy to remember. Now let's talk about the loans and advances. So lending by the bank can be for different purposes. It may be for short term lending, or it may be for the long term lending, or even it may be based on the secured or unsecured base. Secured means taking the security, collateral security, guarantee. Unsecured means no security, like credit card. So based on that, how the RBI control the loans and advances? Simply for that, we have to see what direction RBI issue. So direction to control the advances. Selective credit control. So what is SCC? Selective credit control. This is no more important nowadays. Still we will learn about it. It is very easy concept. Selective credit control means only some selected commodity, for example say sugar, that will be controlled by RBI. Then restriction on loans and advances. Restrictions on power to remit the debt. So for what? For simply say loan to the director, there are some restrictions. Then loan to director, loan to the relative director, these are not allowed. So these are some restrictions that also we will see. Okay, so let's start with the first, direction to control the advances. So how RBI can give the direction? Simply see, very important, section 21 of the Banking Regulation Act empowers RBI to determine the policy on advances and can issue the direction to control the advances of the banking company. So section 21 of the Banking Regulation Act empowers RBI to give direction to the bank regarding the loans and advances, right? Section 21. Now see, the direction which are binding on the banking company, and these are related to the following. These are binding means these that compulsorily bank has to follow as per section 21 of the Banking Regulation Act. What are the that mainly that instruction are mainly with reference to the what should be the purpose of advance, what margin should be maintained on the secured advances, what is the maximum amount of the loan that is given to the firm or individual, what is the maximum amount of guarantee bank is offering, what is the rate of interest and other terms bank is charging, bank is asking. So that all guideline RBI can issue. Okay, no need to remember, just go through it. Okay, so that about that RBI can issue the guideline and direction. Now there are some statutory restriction on loans and advances as per section 20 of the Banking Regulation Act. So section 20 is all about restrictions that RBI can impose on the loan and advances that bank can offer. Okay, now see here, section 21, it is not 21, it is 20 bracket 1. Okay, remember. So section 20 bracket 1, according to that section of a Banking Regulation Act, bank cannot sanction loan against its own share, right? So it is very much important restriction that a bank has to follow from the RBI. Okay, this is all about under section 20. So bifurcated, we can see that section 20 section 20 bracket 1, RBI says that bank cannot give loan against its own share. Section 20 bracket 1, cannot sanction, the bank cannot sanction loan to its director of the same bank, right? Or the company or the firm where director is interested as a partner, employee or guarantor, or having substantial interest. What is substantial interest? Simply substantial interest means simply having ownership 10% or above. That is called as the substantial interest, right? So simply section 20 bracket 1, according to that section, RBI says that bank should not give loan to the director of the bank where he is having some substantial interest. Okay, and staff loan to the director representing the workman or the officer. So see, you are very much aware that in the body of the director of the bank, the one must be from the workman category and one must be from the officers category. If it is present, then these rules are not applicable to that director because he is representing the workman. And loan against the liquid security, these are also exempted because we are having liquid security. Now, so for example, some director want loan, right, and he is offering some liquid security. For example, he want loan against its own FD, so it is liquid security, so bank can offer it. Now section 20 bracket A, without prior admission, without prior permission of RBI, bank cannot write off the loan given to the director, right? Loan for rupees 5 crore and above to the director or the relative, and can only be sanctioned by the board of director. Okay, so simply section 21A gives that advises that if the bank has to write off loan which is given to director, they have to seek a prior permission from the RBI. Apart from that, loan of rupees 5 crore and above to the director or its relative can only be sanctioned by the board of directors. So if anybody from the board want loan 5 crore and above, they have to get sanction from the board of director itself, right? And previously it was 25 lakh, now it has raised to 5 crore and above. Okay, section 21A is all about that how the rate of interest is charged by the banking company and not subject to the scrutiny by the courts. So it is very important that section 21 says the rate of interest which is charged by the bank not subject to the scrutiny by the courts. So whatever rate of interest the bank can apply, it is decided by the bank, right? So the court cannot interfere in the rate of interest which is decided by the bank. This is what about the section 21A. And some very small thing that the usurious loan act 1918 which is not applicable to the bank. How? Because this act is all about that the higher rate of interest cannot be charged by the private lenders. This is all about the act, usurious loan act 1918. This is because bank are not charging the higher rate of interest, and bank is not individual entity, bank is not individual person. So this is applicable only for the individual person like sahukar, private lenders. Okay, so it is not applicable to the bank. So no need to discuss more about the usurious loan act 1918. Now see the selective credit control. So how RBI have some direction about the selective credit control? See, it is very easy term. Selective credit control, it is controlling some credit. Selective means very some few, right? So selective credit control means what? See, that SEC basically imposes restriction on quantum of credit. Quantum means basically amount of credit, and the rate, that is interest rate at which credit can be extended. There is amount, or basically it is having some restriction on loan amount and the rate of interest which we are offering. It also prevent the speculative hoarding of essential commodity. For example, say food grains, pulses, edible oil, cotton, sugar, using the bank credit, and it helps to check the undue rise in the prices of such a sensitive commodity. So basically it is helping to control the inflation also, right? So how it basically you can imagine, see how can be controlled the if prices of food grain is increasing. So how what it can be done? So RBI can ask to the bank that who are the dealer in the food grain, don't sanction to the loan to them, sanction them loan to them with a higher rate of interest, so that automatically price will go down. So these are what the some commodity. Now see, most of the essential commodity other than sugar are now out of the purview of SEC. At a present, restriction under selective credit control there is only in case of levy sugar, that is mainly in the buffer stock with the sugar mill. So we can check out here that nowadays SEC is not that much of important because it is only applicable to the levy sugar buffer stock in the sugar mills. These are having some stock with the sugar mills only. Now it regulated the quantum and the cost of a credit. That is what I have already told you in the first line. How? By operating the tools. What are the tools that basically the RBI can use? RBI can specify about the minimum margin for loan, right, against that commodity. Then RBI can impose a ceiling also on how much level of bank can issue the loan. RBI can decide the minimum rate of interest also, so that there will be controlled prices. So in that way RBI can impose the RBI can use that tool basically for the purpose of credit control. Okay, so this is very easy. Nowadays nothing has to be important here because only one item is remain there, only sugar. That is mainly the levy sugar available with the in the buffer stock with the sugar mill. Okay, very easy to remember. Now there are some restrictions on power to remit the debt. So means what? See, bank are having power to give the debt, but there are some restrictions, for example, to the board of director. So section 21A, section 20A of the banking company specify that RBI has to give the bank has to seek permission from the RBI for what? For if they have to give any loan, that is remit debt to its director. If they have to give loan to the firm or the company in which director is interested as a director, partner, or the agent, managing agent. In such cases, they have to seek permission from the RBI. and a loan to the individual for whom a director is a partner or the guarantor, right? In such a cases also bank has to seek permission from the RBI. Any permission, any remission without RBI's permission is void. So if you do any remittance means simply the loan. If you sanction any loan to your director without permission from the RBI, then it is not valid in front of RBI. It is void. Okay. So this is the first part of this chapter. You can subscribe us on the YouTube Banker Zone. You can join our Telegram group Banker Zone CIB. You can directly search Banker Zone CIB, and also you can download the application from the Play Store Banker Zone CIB. Thank you, friends.